As was widely expected, the Reserve Bank elected to hold the overnight cash rate steady at 2.5%. The reasons for this were that although the Reserve Bank sees moderate growth in the New Zealand economy, the long shadow of European uncertainty continues to cast a pall over expectations for world economic health. So what impact did this announcement have on the markets? Looking at currency first, the Kiwi actually strengthened against most of its major trading partners. The reason for this is because of soft data coming out, particularly from the US and Australia. In the US, the Fed announced that it would be holding its equivalent of the overnight cash rate at roughly 0% until late 2014. In Australia, recent week CPI data indicates that there may be a rate cut in Australia. Looking at equity markets, it was a quiet day on the NZX 50 because of the public holiday in Australia. The market was relatively flat. In the States, the Dow initially dipped on weak housing data, but recovered to be almost flat. In Europe, the markets rose by nearly 1% on good news in terms of sovereign debt raising. So what impact is the global financial rollercoaster having on farmers' confidence? Well, the Federated Farmers recently released a survey of farmers' confidence. It's the first one since July 2011. And that showed, unsurprisingly, that there is a bit more pessimism out there in rural New Zealand. In particular, in terms of world economic recovery, there is a growing degree of pessimism, particularly amongst grain farmers. However, views around farmer profitability still remain relatively high, particularly amongst meat and fibre farmers. So what's on farmers' minds in particular? Two things really. One is around debt reduction, which still remains a key aim, although that hasn't changed much from the July survey. One other thing though, is in terms of impediments to business, and that is around regulation and compliance, where farmers still rate that as the primary concern going forward.